Hello, chart watchers and Decision Point faithful. Welcome to this Monday, August 2nd, 2021 Decision Point show. My name's Erin Swenlin from DecisionPoint.com. Carl couldn't join us today. He had an appointment, but hopefully we'll be able to get him back next week. I want to prepare you for the week. I'm going to show you all of the charts that I think are the most important. And let's go ahead and just dive right into our agenda. Of course, we always start with our SPY and indicator overview. It gives you kind of a flavor of what our DP alert reports are like. So if you like that, you might want to check us out at DecisionPoint.com. I'm going to go through some of the trading room stocks that I was looking at this morning. Tom Boley joined me in the trading room. It was a lot of fun. And if you're interested in the recording for that, just be sure that you sign up as soon as possible this afternoon or this evening to be on our free newsletter, because our free newsletter, I send out all of the recordings to my free trading rooms, as well as all the free material that I offer for the week. So we're going to look at some of those stocks that I thought were very interesting. And then from there, I'm going to show you how you could maybe time those entries and exits on those particular stocks. Because like I said, I think they're looking pretty good. None of them are in my portfolio, but there's certainly ones that I'm considering. And then I'll finish after we look at those. We'll look at the diamond of the week. It's the one I've selected. I think it has some great potential and you'll probably recognize the name. So again, like I said, my live trading room is free and it is on Mondays. All you have to do is go to our website, DecisionPoint.com, and then just click on the registration. You'll see the ad for the trading room. Just click there. And you can register. It's one time. So once you're registered, you will get the information every week as to how to log in and enjoy our free trading room. And all of the recordings are sent as well to those who are on our free list and those who sign up for the trading room itself. All right, so far the Decision Point sector scoreboard really hasn't changed that much. We still have a neutral signal on energy and on materials. But I know that materials are finally starting to show some strength. I was really looking at them pretty closely this last week. We'll have to see whether that area still looks good. I'll show you that XLB chart after we do our SPY and our indicator review. All right, so that is what we're doing as far as our scoreboard goes. So let's go look at some charts and see what they are telling us right now. So like I said, I will start with my SPY and indicator overview. So here is what happened today in the SPY. As you can see, I know we were up for a little while in trading today, but we ended up finishing lower. And it looks like we have a bearish engulfing candle here. So I would be looking for more downside. Additionally, while we do have a positive RSI here, we have a new PMO sell signal. So we're whipsawing back into the sell signal that we saw in mid-July. So this is something that's concerning, as well as noticing that the OBV has these declining tops. And, we had some rising tops back here. So that was a negative divergence. And I'm seeing that probably manifesting right now in the market. So I would be expecting lower prices at this point, but what are our other indicators telling us? Well, the VIX is something that I'm very concerned about right now. You can see that we do invert our VIX so that the higher readings are on the bottom, lower on the top. Mainly we do that because that tells us that oversold readings are those very high readings. When you get these punctures below that lower Bollinger Band, you're going to usually see the market turn to the upside. And you can see that that's exactly what happened right after that. You can just see how that goes. But the problem I'm having is that we're oscillating here below the EMA on this inverted scale. And that suggests that there's weakness within the market. And we haven't punctured that lower band. So we're still in a position where there certainly is still some nervousness out there. I was really concerned about this rally hanging around when we started to see this oscillation below that EMA. When you have rising prices and new all-time highs being set, you should have more complacent investors, not more worried investors. So that's a little bit of a divergence that we need to pay attention to. When I look at the 1-year daily chart, I talked about this one briefly in my trading room this morning. You know, we have a really nice intermediate term rising trend going on here. But the problem is we haven't tested the top of it since the last time back here in April. And instead, while we are seeing rising prices, it's now put into place right in between the rising trend, this ascending triangle formation. And those are very negative. You're supposed to expect a drop and a breakdown, which would imply on the S&P that we will get a test, certainly, of that 50-day EMA, but there is that chance that we could see that breakdown coming soon. I'm noticing, too, sort of this double top look to the SPY as well. So we need to tread lightly right now. When I go ahead and look at our climax indicators, this is where we determine whether we have an upside or downside climax day. We haven't really had much in the way of climax days, kind of had a little bit of one back here where we had that shoot to the upside after a few down days, but it really wasn't confirmed by our volume ratios, which I'll show you right now. So the S&P one in particular, I'll show you. So we did see a little bit of confirmation here of that climax day here on the S&P, but we really didn't see much in the way of the volume ratio for the NYSE, the overall market. So, you know, it looked like either a mild climax or possibly, you know, a fake out, breakout setup. So, you know, it didn't follow through like we would normally expect on a upside initiation climax. But like I said, we really didn't get those outside readings. So we didn't really come in strong that we were in an initiation phase. When we look at those short-term indicators, the Swenlin trading oscillators, this is something that has been bothering me. We've had very overbought readings, and now we're finally starting to see this decline on these indicators. Generally, when you see the Swenlin trading oscillators moving downward, you should expect the market to move downward as well. And they're coming out of these overbought conditions, so that's a concern. We don't actually have the update yet on the stocks above their 20-day EMA or how many have PMOs that are rising. But you can see as of Friday, we were starting to lose some of that participation, which can also spell trouble. All right, let's go ahead and look at the intermediate term indicators. And you can see they are rising. So this gives us a little bit of hope, if you will, that we're not going to see a huge decline or maybe not even see the breakdown of this intermediate term rising trend, at least not yet. So we do have that bearish rising wedge, but it's kind of backdropped with these somewhat positive indicators, our intermediate term indicators. Again, we don't know how many crossover buy signals there were, but we did see that increasing, which is nice. It took away the negative divergence that we had going in here. You can see now we have these rising tops, and that coordinates with the rising tops on the SPY right now. So I'd like to see more than 62% with crossover buy signals. I suspect, given that the market did decline today, that might be going down. So rather than an improvement in participation, there's a good chance that we're going to see some problems with that. Let's go ahead and look at our bias assessment chart. This is rather new. I talked about this in last week's DecisionPoint program. But one of the things that I've been watching and making comparisons with is our Silver Cross Index. This measures how many of the S&P 500 stocks have a 20-day EMA above the 50-day EMA. That means they're on an intermediate term trend model, Silver Cross buy signal. We consider the Silver Cross a cross of the 20-day EMA above that 50-day EMA. And like I said, we don't have the updated numbers here yet on participation, but I highly doubt that they will be moving higher given that the market moved lower today. So that's not going to be a good look for the market either. We're going to start losing some of that participation so quickly after hitting these new all-time highs. All right, let's just bang it right on into Bitcoin. Bitcoin has been really interesting of late. You know, we had that nice breakout. We saw the break above the 20 and the 50, and then we managed to get all the way up here and then overcome this overhead resistance that we had here at the two tops back here from May and June. While that looked good, we did have an RSI that was really overbought. I liked that the PMO was getting positive, and we were starting to see the OBV getting some volume there on that move. But you can see as soon as it hit that 42.5 level, it started to pull back. And, you know, I won't go all the way in and say that, you know, Bitcoin is in for a huge decline. I'm really not totally convinced of that, mainly because we do have that silver cross on Bitcoin. And right now it is still holding above that 200-day EMA. We'll have to see when I write the DP alert later if that's still the case. As long as we hold that level and maybe start seeing some movement, consolidation above that 200-day EMA, that would certainly give me more confidence in an idea of a breakout above 42.5. You know, we've got the positive RSI and we do have that PMO buy signal, but you can already see as price has been pulling back, we're already getting some damage on the PMO. So it's kind of a mixed picture here as far as Bitcoin goes, but as long as it holds that 200-day EMA, I would be looking for more sideways movement as it attempts to break out of this trading range. Let's look at the dollar. Now, this one's been very interesting. You know, we had the rising wedge. We ended up with the follow through on that wedge with the execution to the downside. We did see price hold right here on that 200-day EMA, but by Thursday, we had dropped all the way down below that 50-day EMA. This is all the while as the RSI was negative and the PMO is on a sell signal coming in overbought territory. It's still looking pretty sickly at this point, but we are holding that 50-day EMA. I'm still really looking for a test to come down to this 2460 area, test of this gap support. It should be interesting moving forward here for the dollar, but I don't think that the decline is completely over just yet, given the negative outlook here as far as our signals are concerned on the PMO and the RSI. If we look at it in a longer term picture here, you know, maybe what we're seeing is this sort of cup with a handle coming on here, and maybe we'll get that rebound off of the 50, but it really needs to hold that 50-day EMA. And if I do see a pretty good rebound off that 50-day EMA, I'll definitely be changing my bearish bias on the dollar back to at least neutral, possibly look for a bullish resolution. But at this point, you know, we're just holding that 50-day EMA, and as I said, the momentum is just looking very sickly. And you can see that RSI actually topped in that negative area, that negative territory below net neutral 50. All right, gold. What is going on with gold? So I've been bullish on gold. It's not really doing a whole lot, admittedly, at this point. But materials were really starting to pick up at the end of last week. And I don't think that that's over. Certainly, if the dollar is going to fall, that's going to put the wind at the back of these materials stocks, including gold, because, of course, when the dollar falls, gold generally will see a rise. So at this point, gold is really starting to just, you know, meander sideways, consolidate, really braiding these EMAs. They're all really scrunched up together, or braiding, as I like to call it. So we're just not getting the signals that I would like to see here on gold. But I'm looking, and even though we did finish lower here for gold, we do have it holding above this really short-term area of support at the top of this consolidation zone down here. So I'd like to see a rebound coming right now off of that 20, 50, 200 area. And, you know, I think that the PMO still looks fairly positive. We did get a lot of selling today based on the volume for GLD. So it may not be over. We may actually have to test the bottom of this trading range one more time. The concern will, of course, be the possible double top that's setting up. But for now, I can't get too bearish on gold because I can't get too bullish on the dollar right now. Looking at the 1-year dollar gold chart here, again, you can see that consolidation, that trading range that we're moving within at this point. And there's a good chance, as I said, that we might end up having to test the bottom of this range. But you know what? If we get a bounce off of these key moving averages, we already have the buy signal in place for gold and the RSI is already positive. So if we do see that bounce, it's already starting to. I mean, obviously today it was up a little over 0.25%. It could get really interesting here for gold, but at this point, it's looking a little less exciting than it did on Friday. Gold miners have been interesting. I have been bullish on gold miners just recently, pretty much after that gap up, but really when we saw that breakout here above that shorter term trading range, it looks a lot like gold, doesn't it? And we got that breakout. We didn't quite close above the 20-day EMA. And I wasn't really seeing enough under the hood here to think that gold miners were going to, really turn it on. But we started to see that by Friday, and you can see the participation had really started to gain momentum. We had over 2/3 of those gold miner stocks with price above their 20-day EMA, which told me that you only had 10% that already had their 20 above their 50-day EMA. So when you see that many with price above their 20-day EMA, that tells me that this number is likely to get bigger. And when we see those rebounds on this silver cross, that's when we start looking for those rallies. So we got the confirmation of that positive crossover on the silver cross index. And it was being confirmed by price above the 20 and above the 50. Almost 1/3 of the gold miner stocks had price above their 50-day EMA as of Friday. I'll be writing more about gold miners in today's DP alert. All right, USO, oil, what the heck's going on with oil? We had a really nice rebound here off of this support level. You can see the rising trend right here. It did hold that rising trend. It did dip slightly below it, but then we had that beautiful rally all of last week and part of the week before. And oil was starting to look a lot more interesting. Today, it really pulled back in a big way. USO did, with this 2.92% decline, almost 3%, brought price below the 20-day EMA. Starting to look a lot less bullish for oil. Notice also that we have that PMO topping below the signal line, which is always, I consider, especially bearish. So, energy was starting to get going, but it looks like if you're looking at the oil stocks and the oil related stocks, might be in for a little bit of a tough time coming up here. I want to look quickly at that weekly chart for USO because I also have WTIC, West Texas Crude, on here. And obviously USO, it's, an ETF, so it travels a bit differently. But in relation to West Texas, it does follow suit, of course. And you can see that WTIC had hit overhead resistance here at 77. And so it started to pull back at that resistance level. So even though we really didn't have a resistance level that was really visible on USO, USO really responded, of course, as West Texas did with that decline. And so now we're seeing USO pulling back as well. Could be a double top situation coming in here on oil. So we'll want to keep a close eye on that. Like I said, I cover this chart every day in the DP alert. All right, bonds. Well, with rising or falling yields, bonds have certainly been a place of favor. TLT has been moving up steadily in a rising trend, but it's been pretty messy. And, overall, I would just say that I like bonds going forward. You have a new steeper rising trend line now here, and we're getting the bounce off of it. We had 2 days now above this area of overhead resistance, matches up to this February top. So it's looking pretty positive right now for bonds, but that brings us to our TNX chart. So when we look at the 10-year Treasury yield, really bad today, lost quite a few basis points, coming down again to test this support level. You know, I've been looking for this zone to hold, but I have to say, looking at this PMO now with that really significant top below the signal line, that leaves me pretty bearish here on yields. It does look like we're still going to be experiencing that falling yield, falling rate environment. And as I showed you with the TLT, that is doing well for bonds. So I would expect to see bonds still be a place of flight, if you will. But this is another point, right? We have falling rates. We have people coming into bonds, but we're making new all-time highs in the market. We're looking at a strong market. So why are we seeing this fleeing to bonds right now? That's another point in case in point that there are problems under the surface here for the S&P. All right, that pretty much covers our SPY and indicator overview. Like I said, I'll be going over these in the decision point alert, but I did talk to you about materials. So let's look at our under the hood chart for materials. These charts, by the way, are available to our subscribers exactly how you see them set up. We annotate them, keep the annotations up to date every day. So it's a great little addition to your decision point subscriptions. And these indicators certainly are available on StockCharts, but they are not configured on a chart like this. You'd have to do that for yourself. But looking at materials, you can see why I was really getting bullish here on materials. Really nice breakout. Here is a falling wedge. The expectation is a breakout. We got that. We pulled above both the 20 and the 50, RSI positive, PMO rising. This really looked like a great place to park some money for a little while, but I'm starting to see all of these indications under the surface that there could be a bit of a problem. For example, seeing that silver cross moving sideways. I'll be really interested to see what happens with participation after the close today, after the indicators update, I'm sorry. Right now we were seeing some really nice improvement in participation for materials. Now, with this big decline closing pretty much on its low for the day. So that is a significant problem. The only thing I can say is that at least we're seeing this rising trend. It hasn't been broken. We're coming back after a nice breakout above that 50-day EMA, coming back to test it. So this could offer some interesting entries as we move forward in the week. But that does bring me to these trading room stocks that I started to see today. I get these from your requests in the free trading room. Also, like I said, I had Tom Boley from Earnings Beats with me today. And so he brought some interesting ideas. So I wanted to look at a couple of those stocks, and then I'll get right into my diamond of the week. But one of the ones that came up, actually, I think this one came up in my scans before I did logged on to the program here, and that is Alarm.com Holdings. Now, it's been in the software field, and let's face it, software was really taking off, and Alarm was really not doing much. But right now, it's starting to improve. It looks like this could be an interesting beat down stock to consider. You have that double bottom, which I'm seeing on a lot of charts right now. And now you have the breakout above the 20 and the 50. And then you also can see that 5-day EMA crossing above the 20-day EMA. That's a short-term trend model buy signal. The RSI is just now entering positive territory. So I like what I'm seeing here on Alarm. So let's just look quickly at a 5-minute chart. And as you can see, as far as a buy point comes in, I look for a PMO crossover on my 5-minute candle and a positive RSI. That occurred right about here. And you can see that certainly that would have been an excellent entry. We did end up with an overbought reading here, a crossover. I would not have been real interested in buying into that particular crossover buy point because that RSI was so overbought. But notice it really had a falling out. But at the end of the day, look at the volume that started to come in. And you can see that that PMO is trying to turn back up, which could give us a really interesting buy point tomorrow. All right, I've got time for a few more here. Let's look at applied materials. This one Tom was talking about, if you're looking at semiconductors, this one's looking really interesting. You know, AMD has been breaking out. It's really a runner at this point. It's hard to consider entering a stock that's been moving up that quickly. In fact, I'll just show it to you really quick. There we go. So you can see it's just really taken off. Certainly the big money is in this particular stock, but it has a parabolic move. It's really due for a pullback, and it could be a really painful one. So I'm looking more for some of those beat down or just stocks that we know are really good companies like Applied Materials. Notice the breakout that we had today, and I'm really liking that RSI being positive. You also have that buy signal intact. And then that we were talking about relative strength, you know, relative strength wise, amongst all of the large caps, Applied Materials is doing quite well when it has a scooter above 75 for this long. But you can see rising bottoms now coming off of this relative low on AIM and on Applied Materials. You can also see that it is starting to outperform the S&P, and the group is really looking good here. The semiconductor space looks like it's going to wake up, and we should get some more interesting movement there. But let's look at possible buy points. All right, and here you go. Said nice move on the open, but it did start to fall and falter. But at the end of the day, we did get a nice pump on some volume. It does look like it might want to turn up. So you'll want to be watching for this oversold PMO to make the turn. I prefer to wait for a crossover and a positive RSI, but of course you can get into, you know, more aggressive entries and consider that. But this one looks really interesting on this pullback as well. And let's look at Maxar Technologies. This is in telecom, and I really like the way this chart is also shaping up. These would all be possible diamonds for me. So it's a similar situation, big move on the open, faltering pretty much all the way down, but now we're at this support level that we had back down here when it dropped. And again, we want to wait for that PMO to turn back over here. Now, when you're talking about sell points, if you wanted to sell, I always just wait for an overbought PMO to start turning. And you're generally going to get a really nice sell point. So that's something you can also consider on some of the stocks that you may currently own. All right, but it is time for my diamond of the week. And as I said, I think you will recognize this name, Tesla. Tesla really is looking quite good right now. You know, it really got a deep pullback to the 200-day EMA, started to get back above those key moving averages, but really wasn't going very far, not going really anywhere interesting. But now we have a really nice breakout above that 700 level. RSI is still very positive. You have a new buy signal coming in on the PMO, and you can see that this one is a great performer in that automobile space. You can also see that it's doing well again against the S&P, and the autos are looking very interesting as far as relative performance here. They're getting ready to bounce off of this relative low. So this could end up being a pretty interesting area. I think Tesla is really kind of, it had its beat down moment, but it does look like it's getting ready to break out once again. Could end up seeing a really nice move to the upside of about almost 25%. That's all I got for you. I want to wish you all happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.